Did you know that all markets are intercorrelated and interdependent? This means all charts are intercorrelated and interdependent too, no matter what market you're looking at. For example, if you see something like the ADP non-farm employment change coming in double what was expected, could that impact the DXY? Could that impact gold? Could it have something to do with inflation? What about the US 10-year yield? What about crypto? In this video, I'm going to show you how everything is connected. Stay tuned, it's going to be a lot of fun. Hi everyone, I'm Ken from Crypto Trading KS. Rule 446, all markets are intercorrelated and interdependent. If you're new, a very warm welcome and welcome back CTKS family. The ADP non-farm employment change was released and it was a bumper. 497,000 new jobs were added, where the expectation was 226,000. If you like the content, please subscribe and remember, smash that like button. When people get into financial markets, they're not taught how to look across all of the different markets to find a stacking of probabilities. Instead, they're told to use a retail mindset to just focus on the charts that they trade. Professionals don't do this. They look at the market pulse and understand market structure. For example, the ADP National Employment Report showed a huge gain in US private employment, 497,000 jobs added in June. Private employment is now 128.5 million people, and you can see it's been growing very strongly. Different industries are growing at different rates. And we can see that small and mid-sized businesses are supercharging that increase, but large businesses, they're firing. Not every industry is experiencing employment growth. We can see that manufacturing is down by 42,000 people. Trade, transportation and utilities is flourishing, but information, financial activities and professional and business services, they're not doing so well. But look at the greatest gainer is leisure and hospitality. Please let me know in the comments, why do you think this particular sector is amongst the greatest gainers in employee numbers? And what impact will that have on the broader economic system? However, the main markets, they were not celebrating at all. In fact, all sectors measured reduction, especially energy and consumer discretionary. At the start of the video, I said Rule 446 was very important. All markets are intercorrelated and interdependent. Now you know what the ADP report is. I'm going to connect the dots for you. Financial markets are impacted by government data, fundamental data, as well as the forward interpretation of that data. The ADP report is very important because it's viewed or used to estimate non-farm payrolls. We can see that non-farm payrolls haven't come out. They're coming out at 8:30 in the morning US time. But the market is already reacting. For example, gold price down following strong US ADP Jobs Report. The jobs gain was literally double what was expected. The question is, why is that a problem and why did gold get hit? When we understand that everything is intercorrelated and interconnected, the markets are intercorrelated and interconnected, as are the charts. That means we must look more widely. There's currently an 89.9% probability of a 25 basis point increase in the Fed's next FOMC meeting on the 26th of July. How does that impact gold? And what does the ADP Jobs Report have to do with anything? Jerome Powell has said time and time again that a tight labor market and increasing wage expectations or inflation, wage inflation, is going to drive up inflation. In the ADP press release, one thing that was said, annual pay was up 6.4%. This is inflationary. Inflationary pressure means the Fed will increase the federal funds rate. And we're literally seeing that as a certainty. Again, what has that got to do with gold, and what does this have to do with jobs? What it comes down to, if the inflation rate is not under control, the Fed will increase borrowing costs, and also the interest rates where people can put their money into the bank. Gold becomes very attractive when the inflation rate is coming down. This blue line is the US inflation rate. But there's a bit of a problem. When the US inflation rate starts to kick up again, gold loses its shine. You can see how different charts are interdependent on each other. Rising inflation rates put positive pressure on yields, and also positive pressure on the DXY, the US dollar currency index. What does that all mean? If inflation comes up, we would expect the DXY to come up also. Hopefully, this explains a little bit more about why the gold price is down following the strong US ADP Jobs Report. All markets are intercorrelated and interconnected. The Australian market pairs gains as the US ADP Jobs Report sparkles. If the US markets are coming down, they lead the world. If the US dollar strengthens, the Aussie versus the US dollar will decrease. You can see there's not just stock market impacts, there's currency impacts as well. The reason why the ADP Jobs Report is rattling the market, it's because it was such a big difference from what was anticipated. With a stronger than anticipated labour market, the Fed in all likelihood could increase the federal funds rate by more than 25 basis points. In order to curb inflation expectations and to prevent them from getting baked into the economic system. If we see the DXY start to spike, and we can already see it starting to turn around, we could see more follow through on the US 10-year yield, and that's not good for gold. We could see the VIX continue to spike up, major pressure developing on the major indices. We can already see that yields have been spiking, bond prices have been coming down. The rising dollar and rising yields have been putting gold under negative pressure. Massive institutional interest in Bitcoin and crypto has been driving adoption and higher prices. Even so, the crypto market cannot escape the main market's gravity, and we're currently witnessing a bit of a pullback in the crypto market. It's incredibly important to understand your Tier 1 charts such as the S&P 500, the Nasdaq, the VIX, the DXY, Bitcoin, gold, US oil, junk bonds, the US 10-year, and total crypto market cap. If you were, for example, just looking at the gold chart and you were missing the market pulse, you might be just saying, "What happened to gold? I just don't understand." Charts are always impacted by external events. That's why we must understand the market's pulse. One of the most valuable things that you can ever learn is where is smart money buying and selling in the Tier 1 charts, and also inside the Tier 2 and Tier 3 charts. That's what we look at inside the CTKS method service. As a global family, we understand the price is always moving in a wave, but it's moving between CTKS structural levels formed through objective dynamic market structure, which is part of the CTKS method. Hence, Rule 239, CTKS structure overrides. What does it override? It overrides momentum. It's very important to know where smart money is buying and selling inside the price structure of what you're looking at. We would expect that the DXY to come up, but we can see it has internal resistance. Smart money is selling at around that 103.1296 and also around that 103.1100 mark. What does this mean? It means CTKS structure overrides momentum. Price structure is always moving in a wave between groups of SLs or Stanfield levels. This is vitally important to understand, or the charts will just confuse you. There's a little bit more to this as well. CTKS structure overrides negative news. What do I mean by that? When we pop on the indicator, we can see with gold that's been marked up with the CTKS method since 1833, had smart money support levels around that 1911 and also down to 1909. That actually caught price and it became magnetized to it. You can see it very, very clearly. What you're seeing is an override. Without an understanding of CTKS structure through the CTKS method, what typically happens, things look very random. But you can see they're not random at all. This is why professionals look into the CTKS structure of the charts they view. They want to know where the overrides will occur. You can also see that the ADP report, because it came in stronger than anticipated, way stronger than anticipated, it impacted everything from commodities to crypto to Forex. I'm going to start doing deeper dives for you on the daily channel to help you to understand how to apply Rule 446 and also Rule 239. With this, you can gain more certainty in financial markets by stacking probabilities. 3 very important videos and very important indicators were released by the CTKS method service just recently: gold, junk bonds, and the US 10-year. I put some gems inside those videos to help you to understand intercorrelation and interdependency more. The Foundation membership is still open on the CTKS Method service. If you pop across to ctksmethod.org, you'll find it there. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.